Welcome back to yet another Dividend Showdown video. If you're new to the channel, my name is Kenny Robinson. I'm a full-time diversified investor, and in this video we're going to talk all about dividends. We've covered large, we've covered small, but we have not covered them all. I'm a poet and didn't know it. In this video, we're going to cover the often overlooked mid-cap dividends, the best of the best. And of course, we're going to do mano a mano. We're going to cover XMLV by Invesco and DON by WisdomTree. These are two of the mid-cap dividend ETFs or exchange-traded funds with the longest track record or longest history for us to be able to go back and take a look at how they perform in all market cycles. Now, to give you a little bit of an idea of why I like to call them often overlooked is because the mid-cap area of investments truly is, right? A lot of us talk about large cap, there's a lot of focus on small cap, but mid caps are truly often overlooked, right? It's kind of like that channel of frosting inside of cake. We know it's there, but we don't really think about it until they slice that, and then you look at it and you're thinking, hell yes. So I guess if dividends were somehow related to cake, a cash flow cake, mid-cap dividend stocks would be that center channel of frosting that just makes the entire dessert. So without further ado, let's put XMLV up against DON and see which one comes out on top. And just like that, we're in my computer. So as you can see on the screen, for those of you that have watched these videos before, you know that this is the starting page for our analytics. Although before we get started, I do want to show you the fact sheets of both ETFs so you understand exactly what we're comparing here. The first one is XMLV, that is the ticker. It is the Invesco S&P Midcap Low Volatility ETF. So low volatility, again, for newer investors, meaning you don't want to see a lot of up and down movement in the price of your account or the price of this investment, the price movement. And so this focuses on cash flow and low volatility. So very boring, stable, dependable cash flow is what this is designed for. This one came out in 2013. And the next one is WisdomTree US Midcap Dividend Fund, ticker DON, not necessarily low volatility, but it is focused on midcap. Now, to be fair here, there are a lot of other midcap value type ETFs, but they're not specifically focused on dividends. So there's some iShares out there, there's some ProShares, but again, they're not specifically geared towards dividends. So I wanted to be specific with this and really compare two funds that are truly focused on dividends, because value doesn't necessarily mean the best dividend flow. So let's go back to the analytics and let's get these typed in. You guys know the drill, $1,000 each ETF, and let's go back as far as we can. So we're going to go XML, is it V? Yeah, let's see, not Z, X, there we go. And $1,000, this is the Invesco. We're going to compare it to a second portfolio, which is going to be DON. That's an easy one there. And that'll be the WisdomTree US Midcap, $1,000 as well. Let's go ahead and kick it into gear and generate. Come on, come on, get me, get me, get me. It's like rolling a slot, except you know it's going to cash flow. So let's see here. All right, so a little bit different expense ratio, and that's one of the things that we always want to look at, but of course, that isn't something that we want to look at blindly without looking at performance. I like to say that price is only an issue in the absence of performance or value, right? So 25 basis points, 1/4%, whereas WisdomTree is charging you 38 basis points, just over 1/3% to invest in this product. Looking at yield alone, 12-month portfolio yield, WisdomTree has it beat, coming in at 2.5% yield, whereas Invesco is down at 1.86%. So as we go down here, we like to look at the trailing returns, okay? So total return over the past 3 months from now, 1 year, or previous 3 months, 1 year, 3 year, 5 year. So let's look at the 5 year of Invesco, 12.9. That's very respectable. And then we look at the 5 year of this, only 7.63. So as you can see, there's several different metrics that you have to look at to make sure that you're getting a really good gauge on these types of investments, right? Because if you're just to look at expense ratio, you would think, oh, well gosh, Invesco, I'm going to go with that one, it's cheaper. But then you look at 12-month portfolio yield and it has much less dividend yield, right, at this point in time. So even though you're paying more over in WisdomTree, you're getting more yield, but then you go down to total return and look at the 5 year on Invesco. So again, there's several different things to look at Don't look at just one factor. So now we're getting down into the equity style boxes. And you know what's really interesting here is mid caps are really any stock with a market capitalization of 2 billion to 10 billion. That's really the general benchmark, the general understanding. And of course you bleed into large and bleed down into small a little bit. And both of these ETFs actually do bleed down into small. Mostly Invesco has a little bit more small cap stock in it. Or what Vanguard perceives to be small cap. That's what the software is doing. And then a little bit of small cap over here, but predominantly, as you can see, you have mid cap all the way across the board, growth, blend, and value. So it's really interesting there. Let's go down here and take a look at sector diversification. So this is where our money is being spread out. And so both of them are actually really low in communication services. Energy, okay, here's a big difference. WisdomTree is pretty decent in energy exposure, whereas Invesco is lacking a little bit. Industrials, wow, so WisdomTree has double the amount of industrials. Tech, wow, WisdomTree again gives you some exposure to tech, whereas over here Invesco doesn't give you that at all, 0% tech. We get into the cyclical sectors of the economy and about the same on basic materials, consumer cyclical, 22 and 10, so double there. So see, this is really interesting because consumer cyclical, think of like automotive sales, right? In a recession, car manufacturers aren't going to be selling as much. That is a consumer cyclical investment. So Invesco focusing on low volatility, meaning they don't want a lot of up and down in their portfolio or in this specific exchange traded fund, they're gonna try to focus on as little bit as consumer cyclical as possible. Whereas over here with WisdomTree, they're just focused on dividend stocks, not necessarily low volatility. So that makes sense that they would have double in the consumer cyclical sector there. Financial services, 17, 11, so decent difference there. Real estate, whoa, wow, 30% in one sector. That's very interesting, and about half over here. So real estate tends to be generally stable. Said people in 2007.
It's free real estate.
Then we have defensive over here, defensive, consumer defensive, about the same, almost exactly. Healthcare, wow, almost exactly there as well. Utilities, big difference here. So utilities, those are very defensive, of course, they're in the defensive sector, but they're also, I mean, those are so boring and they just cash flow. So that would make sense why there would be a healthy allocation in both funds. But again, focusing on low volatility, Invesco, that would make sense that it has more utility and less consumer cyclical. So that actually makes a lot of sense. So let's go up and let's look at the chart, performance and risk here. And let's view and edit all, because as you can see, WisdomTree DON has been around a lot longer than our other portfolio here, portfolio A, which is the Invesco low volatility. So what we have to do is edit this to make sure that we're comparing apples to apples. So let's do this. Okay, so February 12th, 2013 is the, let's do custom here. Perfect, and then we're going to go, it always goes to the last month. So let's do 30, yeah, that'll work. Okay. We're going to reinvest all dividends, reinvest capital gains. Total return here is what we're after for fun. And it is, wow, okay, so they've tracked each other very, very well, really up until February of 2018, and then they had kind of a little bit of a breakout there, or divergence, as you would call it. And so let's check out the total return here. Invesco coming in at 13.9% average annualized return. So any given year, on average, it has performed about 14%, whereas the average annualized for the DON WisdomTree is just south of 12%. Total return cumulative, meaning everything from start to finish, 132% return on your money, whereas with WisdomTree DON, you're just breaking over 100%. Both of those are good return, but that's a pretty significant difference right there, which is fairly interesting. And what's funny is that's lower volatility, so the lower yield makes sense, but you would think that that would also equate to lower returns, which of course the proof is in the pudding right here. This is hard data. It's not always the case. So that's actually pretty interesting. I would have guessed wrong on that. Of course, the best and worst time periods, these are so cool to look at, but unfortunately we're not comparing apples to apples here, so it's really pretty useless for you know, all the intents and purposes of this typical video. You know, what's interesting is there's no alpha, beta, or R squared, and those usually show up, so I wonder why those aren't showing up at this time around. Let's take a look though at the top 10 holdings, and I want to see if we recognize. Now, if you guys remember the small cap dividend video, small cap dividend ETF comparison video that I just recently uploaded, not a lot of us knew the names of these companies because they're small. Obviously, inherently, they're not well known. So mid-sized companies, we should recognize more names. Now, the number of stocks in the Invesco ETF is 80 versus 681 in DON. That's crazy. So they're really focusing on low volatility over at Invesco in this specific fund, whereas DON, WisdomTree, they just want mid-cap dividend yield, and that's what they're after. So that's really fascinating there, the difference in holdings within the portfolio. Let's go down here. Okay, obviously they're both in the U.S. This is the geographical diversification. Let's go down to the, top 10 holdings. Hawaiian Electric, this is a utility, obviously. In fact, I think PPC Ian owns that one, if I'm not mistaken. Target Resources, I've heard of that. Campbell Soup, what's that? W.R. Berkeley Financial Services, rings a bell, but I wouldn't be able to tell you exactly what they do. Northwestern Corp, Utilities, Cody, know them. Of course, Smucker, who doesn't know that? Hasbro, L Brands, ooh, that's been a killer lately. See, consumer cyclical, you know, guys, we don't buy our women Victoria's Secret in recessions. Well, some of us don't, some of us still do. The Western Union Company, I used to send money to my really good friend in Brazil through that company. Baker Hughes, CVR Energy, Whirlpool, of course. We come over here, Douglas Emmett is a REIT. Spire, of course, American Financial Group. It's really generic. I don't know if I could specifically tell you what that is. Brown & Brown, I know for sure. OG Energy, IDACorp, love that. Love this stock. I did not know this was such a large holding in this ETF. I might just buy it because of that. Idaho Power is such an awesome company. I've made a killing on that individual stock. I own it. I pay them every month for a lot of my real estate. This is the power utility in Idaho. So they're very efficiently ran. And power is very cheap here, but they continually make money. I love that stock. That's really cool. So let me know down below if you guys own any of these individual or if you recognize more than I do. So with that being said, the verdict is in. Obviously, if you're looking for total return, Invesco mid-cap dividend, low volatility is the place to be, but don't expect any high amount of current cash flow. Although if you do want that cash flow, you might want to look further into WisdomTree, ticker DON. So with that being said, thank you so much for watching. If you're new to my channel, welcome. Join the family by hitting that subscribe button and the thumbs up to let YouTube know that I'm doing a somewhat decent job on here. And of course, I love to hear all and any of feedback down in the comment section below. So with all that being said, thank you so much for watching, and we'll see you guys next video.